Welcome to Tip TV Mining, sponsored by our great friends, Blytheway. I'm joined by my wonderful co-host, Charlie Gibson, Head of Metals and Mining from Edison Research. And our fantastic guests today are Mark Learmonth, CFO from Caledonia Mining, and Maurice Mason, who is Head of Investor Relations for Caledonia. And I'm Bonnie Hughes from Northland Capital. Caledonia Mining just came out with some fantastic results, and they're going to tell us all about it. Profit up, production up, and costs are down. So how do you guys do it?
It's been a delivery of a project that's been on its way for the last 2 years and has another 2 years to run. So, we said we were going to get production up from 43,000 ounces to 50 last year, going up to 60 this year. We said that we were going to get the costs down. The costs have come down pretty much as we expected. And then a slight benefit from a slightly higher gold price, but not much. But I think significantly, that all led to an increase in gross profit of about 80%. But below that, below the gross profit, we had about 150% increase in earnings per share from just less than 9 cents to 21.4. And a big contributor to that was actually the activity of the Zim government, who effectively rebated back to us a significant proportion of the royalty that we pay. And within the really tight fiscal constraints that the Zimbabwe government operates in, that's a very welcome sign of support, not just for us, but for the gold industry in general in Zimbabwe.
Talk to us a little bit about, because obviously 2016 now is history, and I think we've spoken on a number of occasions before, haven't we, about your ramp up and your production plans. Tell us a little bit about what 2017 holds so far. 2017
will be a continuation of 2016 in that we will still, the thing that's going to change the game at Blanket Mine is the central shaft. And the central shaft will be finished in mid-2018, okay? So that's when we're going to be entering a whole new world in the way we operate the mine.
It seems like you're slightly ahead of schedule on the shaft
We're pretty much on schedule. The schedule had all sorts of contingencies built in for normal mining stuff, and so we've had to accommodate some incredibly wet weather in Zimbabwe at the moment. We've had to accommodate some quite severe lightning strikes on the equipment, but that's all in the plan. So we're bang on target in terms of timing, and we are, I hate to say this, slightly under budget in terms of capital expenditure. So that's going very well. So next year is going to be very much a continuation of this year, but just slightly bigger. So we're still running around.
So you mean 17 will be a continuation of 16?
Well, 17 will be a continuation of 16, in that we'll still be operating above 750, slightly below 750, but the new central shaft won't have been commissioned. So production this year, 2017, we're targeting about 60,000 ounces, so up from 50 last year. And as we've seen, you saw it in the 2016 results, as we increase production, your average cost per unit does begin to come down, because 65% of the on-mine costs are fixed. Pretty much 100% of the group G&A costs are fixed. And so as you produce more ounces, the cost just comes down. Also, in my mind, I'm still slightly sanguine about the gold price for this year. I still see the gold price sort of tickling up slightly towards the end of the year from where we are today. So the consensus for the forecast we're looking at, the guidance we put out for 2017, is about 34 cents a share compared to 21 last year. So continuation of earnings growth.
And I noticed that the Zimbabwe government has given you some incentive on gold export sales.
Yeah, that's right, and that's very welcome. There were two incentives. The first one, relatively minor, is we got a discount on the royalty in respect of incremental production. So just to unpack that, 2015 we did about 42,000 ounces. 2016 we did about 50,000 ounces. So incremental production was about 8,000 ounces, and so 8,000 ounces multiplied by the average gold price for the year, which was what, 12,300. And then 2% of that's only $180,000. But okay, that's very welcome. The bigger benefit came from effectively rebating half of the 5% royalty, which came back as an export incentive credit. That plan was announced in May 2016, but we weren't clear how we were going to get the money, if we were going to get the money, how we were going to get the money. And so we didn't fanfare it, we didn't account for it until we actually got the money in the bank. And just right at the end of December, we actually got $1.1 million in US dollars into our bank account. We could use it, we spent it, and so it seemed appropriate to account for it. Next year, this year we're in now, 2017, the benefit will be 3.5% of revenue, not 2.5% of revenue. And again, I'll just repeat what I said. It's the Zimbabwe government is doing this to specifically to encourage and stimulate gold production and gold exports, because they recognise they need the gold sector to export and earn them the dollar revenues they need. And it's great. It's great. Well done, and long may it continue.
And based on that, I mean, I guess that means that your concerns about possibly a change in government, which could happen sooner or later, would be mitigated because the next government would most likely feel the same way about increasing gold exports.
Well, the fundamentals of the Zim economy are, well, they may change slightly. At the moment, I think they're benefiting quite significantly from the start of the tobacco selling season, which goes a long way. We can come back to that if you like, but that goes a long way towards addressing a liquidity problem in the Zim economy. But the fundamentals of the Zimbabwe economy are that it will depend upon the gold sector to earn foreign exchange. Agriculture is not going to come back quickly, tourism is not going to bounce back quickly, manufacturing is going to be very difficult to rebuild, and so I'm reasonably sanguine that any government that comes into in the course that is it this year, next year, the year after, whenever, it's not my problem, will have the same highly commercial approach to stimulating the gold sector and the mining sector generally.
So what's it like working there at the moment? Is there enough liquidity, by which I mean notes and coins in circulation, for the economy to actually function? Can you get spare parts when you need them?
Oh, absolutely. There was a very significant liquidity problem in Zimbabwe, particularly towards the end of last year and in the first few months of this year. Now that meant that we have to spend a lot of time managing that situation, and we did manage it. So there's three avenues of funding that are required. The first is Blanket Mine has to pay its bills. It has to pay for the consumables that it uses, so the cyanide, the explosives, the drill steels, and all the capital equipment that it's using. So Blanket was spending $20 million last year, plus another 12 of consumables. So, that's a significant amount of money. That has to be paid. If Blanket can't pay that, Blanket can't continue. And there's never been any difficulty getting that money out of the country. On top of that, we then take out a management fee, which is nearly $300,000 a month, and that's used to cover the head office expenses and other incidental costs. On top of that, we also get out various loan repayments. And whilst it was difficult towards the end of the year, it was a situation that we paid very great attention to. We managed it. So in the last few weeks, so where we are now, sort of towards the end of March, since early March, the situation seems to have improved very significantly. And we've seen a significant easing and improvement in the rate at which we've been able to take money out of the country. And I think that really comes down to the commencement of the tobacco selling season, as I mentioned earlier. It's a big crop, and it's a good crop, apparently.
And Maurice, what do you have planned for shareholder outreach in the next few months? I understand you're doing some conferences.
We are, so we'll be attending the shareholder conference seasons in London and various conferences elsewhere, Switzerland and New York. It's a nice set of results to talk about, so we're finding those meetings generally well received, and good news and profitable businesses are popular. So it's a nice story to tell.
And you consistently over-deliver.
We have, and we've been careful in managing, in doing what we say we're going to do, which sadly in the mining industry is a competitive advantage. It shouldn't be, but it is. And so we're happy with that, and we'll hopefully keep that up until the end of the delivery of this project in 2018.
And then remind us, because time is getting a bit short, but remind us, when the world changes for you in 2018, then what does everything look like at Blanket?
Blanket will be a very strongly cash-generative business with a capex profile that has declined dramatically. So this year is the last big capex year. In 2018 and beyond, the mine will be generating between $30 and $40 million of cash, and we'll only be spending probably about 5 of that in sustaining capital. Currently, our dividend is 5p, which translates to about 3 million. So you can do the maths for yourself. We have the potential either to increase the dividend very dramatically, which is the default position, or perhaps...
And it's not as though your yield is low at the moment.
The yield's just under 4 at the moment, which we're, for a company of our size, we think that is relatively unique. But we'll be in a position to increase that dividend very strongly, or look at acquisitions which make sense. But we're...
Well, not just acquisitions, organic investments in the business.
Growth,
There's plenty we can do at Blanket itself to reduce costs further and to increase production. So, I mean, we've never really spoken about that because we want people to focus on the plan that's on the table right now, which is taking production to 80,000 ounces. By that, accept that that's going to happen, But then behind that, there's all sorts of other stuff that we can do, and we can flesh that out in due course.
Are there assets in Zimbabwe that you could buy that you might be interested in?
certainly assets.
Zimbabwe is well known as a historic gold mining district.
There are some attractive assets. There are some very unattractive assets, and we know what we like. We know what we covet. It really comes down to a meeting of the minds in terms of value.
Now, I noticed when your share price had a little bit of a pullback back in January that one of your biggest shareholders decided to increase his investment, but also all the directors bought more shares too, which is very encouraging for investors and shareholders. Well, thank you very much, gentlemen, for joining us today. Thank you for joining us on TIP TV Mining. I look forward to hearing some more good news from Caledonia Mining in the future, and look forward to seeing you all next week.